Welcome to Volatility 411 for Equity Armor Investments. I'm your host, Joe Tigay, here in the VIX pit on this floor of the Cboe. We're seeing another selling day in the market. The market can't really seem to catch a break. Yesterday, we were actually up in the morning on good consumer confidence news, sold off throughout the day. We're down again today. The market's really focusing in on this trade war, focusing in on everything that seems to be going around geopolitically around the world, maybe even some domestic political risk too. But I want to throw all that out for a second, just ignoring the headlines and just looking at the charts and the technical analysis of the market. There's a few things that are troubling to me at these levels. Number one is you look at the technical areas. The SMH, or the semiconductor index, that's a leading index that's well below its 200-day moving average right now. Although S&P 500, for its part, is flirting with its 200-day moving average right now as we speak. So is semi is going to lead the S&P 500 below its 200-day moving average? That's something that's troubling me, and I'm watching very closely. The second thing that's troubling is the VIX itself. Now, May 9th, when the market reached its relative low at the 2810 area in the S&P 500, the VIX rose up to 2280, close at 23 level. It was kind of a VIX spike, and I thought, you know what, there's a lot of concern right now at the market. The VIX had a relative high. The market's on its low. Maybe there's some room to the upside here, given the fact that people are concerned enough to move to the upside. Now the market has a new low, but we don't have a new high in the VIX, and that's troubling to me. That means that there might be more selling ahead. That's something, again, I'm watching very closely. And the third was something we saw yesterday specifically. Now, last week, yeah, the market had been in trouble. There had been a risk-off trade. People were flowing into bonds, but they were also flowing into utility stocks in the S&P 500. Now, yesterday we actually saw that evaporate. There was a big interest in bonds, but there was no interest in utilities. Utilities were down the same amount as the market. Now, that's showing me a sign of correlations are rising, and if everything's going down the same amount, that's when you see a big risky event. That's something I'll be watching very closely. So it doesn't matter anymore if it's a safe stock or a risky stock. People want to sell stocks and buy bonds. That's when you see a big risk event, and that's something I'll be watching very closely for. So for Equity Armor Investments, I'm Joe Tigay.